Hi, folks. Welcome to the Weekend Investing Stock Market Weekly Review for week ended 5th of September. A decisive sort of week where the relations with the US are certainly not going to come back like before. I think the week was full of narratives from both sides where uh, US has virtually demanded that we give up any trade with Russia, we give up the alliance, the BRICS alliance, and so on and so forth, and support the US economy. I think it's going to be very, very difficult to find a solution after so much has been said on both sides, but you never know. Markets, I think, are reasonably uh, have discounted this factor that 50% tariff is here. And let's see when the found 14th of October, when the appeal of the US government against in the Supreme Court of the US, whether that passes or not, and what other backup plans to the US administration have to impose uh, tariffs. This week also there was rumors, although not yet confirmed, that they could think of putting tariffs on IT services. If that happens, certainly there will be a lot of disruption, and hence I think this turbulence will continue for some time, perhaps this year, perhaps some part of 2026 also. And the other worrying factor has come around, that the US economy itself is sputtering, and last two jobs data have been really poor, negative job growth, unemployment is going up. And if you see the long term charts, every time unemployment reaches the current levels, there is a recession in the US, and that recession obviously hurts the entire world also. So many moving factors, many moving parts to this equation, where unless the dollar really collapses, that will support a lot of emerging market growth, and that can give us some tailwind. But other than that, there are more headwinds right now on the horizon. So, with all this, caution, I would also like to say that nobody really knows what's going to happen. We can put our mind and say, this is likely to happen or that is likely to happen, but nobody really knows. And just like the COVID example, where post COVID, nobody was expecting the markets to do what it did. So similarly, anytime the markets could catch you by surprise, and hence allocation is very key. Even if market is not making you money right now, you have to stay allocated and stay invested properly and do asset allocation. This week, from our research desk, we had all these fantastic stories: Nvidia's market cap and signs of exuberance. This is now actually coming true somewhat in the last few days. Nifty Reality Index from 86% crash to 600% growth in a decade. A good case study on the real estate index there. India's 30-year stock market returns stand strong in global comparison. So nice study on Indian market returns there. Global gold reserves on the rise. This is a very important story. You must go through this. And India's labor advantage in global manufacturing also studied there. So very nice insights in all of these stories. Do read them on the Weekend Investing blog, or you can also join the Weekend Investing channel, the WhatsApp channel. All weekend investors must join that channel, because the lot of rebalance updates and important emergency updates come in that channel only now. So if you are a weekend investor, you must join that channel. Disclaimer as always: please read fully, understand it, and then only then move forward in the video. And do subscribe to the YouTube channel as well. Nifty chart, I would say, is stable. It digested the GST news, although it had given the jump up before GST was announcement was made nearly a month back, and after the final final outcome was printed out, it was at the same level. So there was no net gain as such due to this. Even before the GST announcement, we were very close to where we are. So the entire GST positivity has been countered with the current negativity that we have, and we are still somewhere near the 20-day moving average, slightly below the 100-day moving average. We are not in a bad situation. We are in a range bound situation, but we are not in a bad situation. 1.29% on the Nifty this week. On the weekly chart, you can see after 2 weeks of drop, we've seen one reasonable up week, and we have taken support at the 24 300 odd support point. S&P 500, surprise, surprise. There's talk of recession. There's talk of dollar collapsing, but S&P 500 doesn't come down. It is closed at an all-time new high this week, 0.33%, and the American market, despite all the narratives is going strong. Gold is up 4% this week. I mean, just see where we have come from 2023 December. We were at 56,000, and now we are already at 108,000 per gram. This is the frog in the pan syndrome, where at every level it seems gold is too high, but then it goes to another level after some time. Just see that after it moves and then plateaus, moves and plateaus. What has happened? Plateauing here, moves up, plateaus here, moves up, plateaus here, moves up, plateaus here, and start moving up again. So gold is seeking some higher ground. Of course, at all-time high, it means that there is no resistance to this. It will fall under its own weight to correct at some point, like it does many times. But whether gold is going to top out here, that is anybody's guess. Somebody is calling 4,000 as the top. Somebody is saying $10,000. So you don't know where it is going. Dollar index is not falling. I was hoping that this will fall very dramatically, but not yet. I'm waiting for the dollar index to fall so that Indian markets can get that tailwind. Whenever dollar index will fall, Indian markets will do well. All emerging markets will do well. That is awaited, and the dollar index is still waiting. In the benchmark indices overview, 1 week returns on small cap 250 was the best at 2.4%. Nifty next 50 at 2%. Mid caps also at 2%. Nifty 500 at 1.6 and Nifty 50 at 1.29. If we see the last 1 year returns, everything is negative right now. Nifty at minus 1.6 and Nifty next 50 almost 10.5%. Small caps also 8.5%. If we see 3 year returns, 3 year returns are very, very good. 11.88% on Nifty and 21.49% on small caps, and 5 year returns are also very good, 16.9 and 28.12. So always look at markets from a longer term perspective. Short term, anything could happen, but longer term, you should be able to get a decent return. That is the whole idea. Sectoral overview. This week we saw a great rally in metals, 5.8% up. Autos, basis the GST news, 5.5% up. Capital market also is coming back. So maybe there are some developments where this weekly expiry business that we were talking about earlier is not going out, because insiders know everything, and this is a pointer to that things may not, the outcome may not be as bad as market was thinking. Perhaps tourism 2.1%, commodities 2.5, consumption 2.6, PSEs 2.2. There was hardly any sector that dropped except IT, which is dropping in the fears of a US backlash. The sectoral momentum trends on the score basis, autos rule the top position. Autos, consumption, metals, and MNCs are in the top four bracket. You can see capital market had swayed down, but it is coming back up very strongly. Energy and public sector enterprise are coming back up very strongly. Pharma and FMCG is going down. You can see it was nicely up over a month and 3 months, but in 1 week it is down badly. And you also can see capital market has come back up. So this is sort of the trends that you can measure from weekly to monthly basis. On the weekly advanced decline stats, very good advances in almost all indices. Nifty next 50, 80% stocks have advanced this week, and 20% to 30% have declined. In the market cap drop from 52-week high, there is a slight shift towards the left. Nifty 50 has 42% stocks, which are 10% from the 52-week high. Another 50% stocks are between 10 and 30% from 52-week high. And very few stocks, 8%, are below 30%. So Nifty 50 has done well in this. Nifty next 50 also has reasonably done well in this, where only 14% of the stocks are below 30% from 52-week high. So not too many stocks have collapsed very hard. Of course, in the mid cap and small cap space, you still have almost 25% and 35% stocks in the 30 to 50% drop range, which is quite painful. And micro caps have even more actually. So not much change, but you would want this entire prism to spectrum to shift on towards the left. Percentage of stocks outperforming benchmarks remains low, less than 50% in all cases, even 36% in mid cap. So very few stocks are outperforming benchmarks. And if we see it over the last 1 month, Nifty stocks have done better, with 50% stocks outperforming Nifty out there. Strength and weakness within benchmark indices. So this is brutal strength, where absolutely you can say what is really strong and what is really weak. So the golden cross is 50 days moving average above 200 moving average. 70 to 72% on Nifty stocks. So 70% of Nifty constituents are are displaying a golden cross. Golden cross, 50-day moving average above 200-day moving average means that the stock is somewhat in a strong position. 30% of stocks in Nifty 50 and 28 in Nifty Next 50 are in weak death cross, which is 50-day moving average less than 200-day. And other indices are in the 50 to 60% range. Reasonable range, not very outstanding, but I would say reasonable. Brutal strength is when price is greater than 25-day moving average, which is greater than 50-day moving average, which is greater than 200-day moving average. So they're all aligned in a trend format. And only 28% of stocks in Nifty are in brutal strength, which you can say you can take positions easily. That number is much lower when you come down to small caps at 15%, mid caps only 19%. But on the other hand, the brutal weakness also is not on too many stocks, only 20% of Nifty stocks. So 10 stocks in brutal weakness in Nifty, and 18, 19, 18, 25 in micro caps, and 18% in CNX 500. So not too bad here as well. So it's a divided market to that extent, I would say. Is the trend improving or declining? So certainly the 50-day moving average has improved from 37% to 54%, and the 200-day moving average has moved down. So there are shorter term trends that are up, but longer term trends that are down within the CNX 500 stocks. So 47% of CNX 500 stocks are below 200-day moving average, which is not a great figure. 54% of stocks are trying to be above 50-day moving average, which is reasonable, but we want to get back to this 70, 80, 90% range on the 50-day moving average. In the trend check in the sectors, CNX 500, 54% stocks are above 50-day moving average, and only 47% are above 200-day moving average. The good thing is that more sectors are now above the 200-day moving average and above the CNX 500. So there are 50 to 73% of constituents of these sectors are above the 200-day moving average. So metals doing the best at 73%. Consumer durables, manufacturing, PSU banks are in the top four lead. And you can see that real estate, there is no stock which is above 200-day moving average. So this is a weak sign here. Media, IT, public sector enterprise, energy, oil and gas, these are all very, very weak in terms of medium to long term trends. On the shorter term trends, you can see some 40% stocks still have prices above 200-day 50-day moving average. But oil and gas, PSC and energy are really weak because even in the shorter term trend, they have very poor numbers. So from here you can make out some trends within these sectors. Surprisingly, last 5 days, FII sales have been not as hard. We've lost 1400 crores, 1159, 1600, and one day was only 106 crore of sales, 1304. So the absolute amount of sales seems to have come down this week. DIIs also have bought less, but they have bought reasonably good quantities from 4,000 crores to 1,800 crores on that front. Cumulatively, if you see the chart, FIIs have withdrawn 52,000 crores in the last 1 month, and DIIs have pumped in 1 lakh 8,000 crores, and that trend does not change right now. So what we need is that FII flows to slow down, DII flows to maintain, and I think the market, if not going up, can stay in a range bound manner. So I think the overall scenario this week was not as bad as it could have been, and we should always hope for the best. And the market will surprise us when we are not expecting, at all from the markets, and that's the optimism that one needs to keep in the markets. Thank you so much. Do like and share this video if you like this content. Do send us feedback on the uh, various statistics that we've shown you. Some you may like, some you may not like, some you may have more opinion or more suggestions on. And certainly do share this video with your friends and family, WhatsApp groups, or wherever you meet them. This really can help somebody, focus their minds on more systematic way of approaching the markets. Thank you so much. Bye bye.